Some top business leaders say China is no longer their first choice when it comes to investing. The U.S. taking that spot for the first time in 5 years. To win back investors, Premier Li Keqiang says the government will open more sectors and new free trade zones. A new foreign investment law is also going to be enacted to attract more foreign investment. CCTV's Hong Peng looks into some of the reasons behind the changes.
Opening up the Chinese market. China is set to remove some big restrictions on foreign investors. The new foreign investment law is now soliciting public opinion. If enacted, it'll entirely abolish case-by-case approvals and introduce a management system based on a negative list.
The negative list is really proposing a notion that the government is really setting a border between what they are eligible to intervene and what is really the freedom of businesses.
We spoke to the Asia chief of a British human resource company that's been operating in China for over a decade. He says the changes will make a huge difference.
The obvious is there is less bureaucracy. Less bureaucracy means that you have faster approval processes. If you look at the West perception of China, one of the biggest barriers of entry is bureaucracy, is looking at that things can be a bit complicated when it comes down to licensing, comes down to all of the layers of approval that you actually need as a foreign company coming into China.
The easing of the restrictions will also bring more small and medium-sized foreign companies into the Chinese market. For foreign businesses like this, it's always good news that the Chinese authorities will have less intervention in the market. Over a year ago, China launched the Shanghai Free Trade Zone, one of the biggest highlights of which is to replace the current troublesome case-by-case approval system with a simple, clear, negative list. Now China is trying to expand that to the whole country. The draft of the new law is being released at the time when China has witnessed its lowest GDP growth since 1990. So is it a GDP deceleration driving the acceleration efforts to relax the restrictions?
Yes and no. By saying yes, because foreign investment over the past 35 years has really been a great contributor to Chinese economic growth. It is part of the Chinese economy. And by saying no, I mean that it is really a strategic approach for China to further streamline the foreign investment legal environment.
Professor Liu says once the changes are implemented, it's the foreign companies that will really feel the benefits. But the Chinese economy will be more dynamic and healthy in the longer term. Han Peng, CCTV, Beijing.